Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. It's Tuesday for Europe. A lot of people are just starting the markets. You see, there's a little pressure on the markets for the last couple days. They on Friday, no, it was Thursday, I guess, because we weren't open on Friday. The news came out on Friday about the inflation, and obviously you can see the dollar index up very firm on Monday. You can see, let's just make it larger so you can see it right there. So you see the jump on Monday from the news. Interest rates heading back up again. They're not lowering them, and that's what everybody's anticipating is lower interest rates. And so when we left on Thursday, they slammed the stock market, concerned about the possibility of the interest rates being higher. As we started off yesterday, the stock market was taking one direction, and the interest rates were taking another. Again, it's the Fed, I don't know, Fed put, Fed insider trading, whatever you want to call it. It's the Fed. The chairman of the Federal Reserve comes out and is telling everybody, no problem, 3 cuts. And we're like, what? 3 cuts? You've been just telling us maybe 1 this year. Now it's 3. And, the markets look at it and they go, this is crazy. And there are some Fed people who are not exactly considered, say conservative on the financial side, turning around and coming out after those numbers and saying, nah, maybe 1 cut this year, maybe later in the year, not the June one that everybody, or let's put it this way, the marketplace itself is anticipating a June cut. The last we saw, the Chicago Mercantiles Index that measures anticipation. It's like it's a futures contract that people trade as a hedge against. It's an arbitrage between interest rates and reality, I guess you could say. And so, that's still pointing in the 70 area, 70%, 72% a cut on June. It's not reflecting really. It's reflecting 3 cuts this year still, and that's because the Fed chair is perking the market, I guess you could say. He's pushing the market, doing that Fed put thing. It's like the best insider trader. The Fed is the best insider trader since Hamilton. That's what it really comes down to. Alexander Hamilton, our first Secretary of Treasury, did a lot of interesting insider trading on bonds, and he's notoriously known on Wall Street as the very first insider trader in America. So, Mr. Powell is doing his best to take that title. I had to take a sip of tea after that statement. All right. Okay, so there we are. There's the dollar index. Let's take a peek at it over on the main platform. If I can find my mouse. Right there. No, that's the wrong mouse. There we are. That's the right mouse. I got black, white, and red mice, and I can't pay attention to which one I'm reaching for at a given time. All right, and there on the main platform, you'll see the dollar index. Oh, I need to start the chat line, too. I just realized that. No chat line yet. Just had to get that insider trading thing out of my head. It's like... And lately, I've noticed my titles are matched up to Mr. Powell and the Fed, which is very curious in its own right. And let's get that chat line going. That's right. It's the white mouse. Just remind me, guys, if I'm not grabbing the right mouse. And let's go like that. And see, I had it up there. Where did it disappear to? There it is. Okay, there we go. And there's the chat line. And let's see, we got any news? Anybody asking questions? Nope, just Robin. Hey, Robin, good morning to you. Sounds like in the end result a victorious Sunday as far as I can tell. It's all good for you. All good for you. Just dial back the decibels. That's about it. Don't get tangled up in the crazy. There we go. So you can see there, the same situation as we see on the beta. You see the, yeah. Good morning to you. Good morning to you. Yep. So you can see there, there's not a lot of push. Like I said, I'd be really surprised if we got past like the 106.5, 7 area. I'm not expecting it that high. I think this is pretty high as it is. It has taken out that 104.5 top. Where's that mouse at? Go back to that mouse right there. You can see it right here. That's at 104.5 top. Been in that weekly buy from all the way up to here. It's still in a weekly buy. I'm sorry, daily buy, and went into the weekly buy right here. And it's been marching in that direction, and it kind of reads, the interest rate. Now let's take a look at the 30-year Treasury bond. It's only a second day in the sell. It started, when the bond price, this is the bond price, not the bond yield. So when the bond price goes up, that means interest rates are going down. And then you can obviously see from here, it's lower here than it is there. And you can see this is lower here than it is there. So in other words, the natural trend has been to go down. It's almost like a triangle developing at this point. Let's put those triangle lines in there. I love doing the R.N. Elliott / W.D. Gann triangle. And it seems like it's breaking that triangle. And that's the interesting part as we speak. Let's see, you go white. Like that. And then we go like this. Scrunch it a little bit more. Is there a low around here? I don't think there is there? Not really. Alright, so we go back to there. And I guess this is the, this is the 1, this is the 2, 3, 4, 5. That's R.N. Elliott's triangle formation, read it, when you read it. And then we may be going for the 7, which is W.D. Gann's concept. Same thing. They worked together. They expanded ideas. They had an office with Jones, right next to Jones. So, it's Jones is the father of the hedge fund industry in America. And so the three of them, W.D. Gann, R.N. Elliott, and Jones, I forget his first name now, had offices up around around 44th or 43rd or 45th Street, right next to each other, away from Wall Street, where they could concentrate and get things done, and not have to deal with. And that's probably why a lot of the hedge funds to this day are all centered in that area. And so you can see there, it looks like a triangle, and it looks like it's trying to break down. It's already challenging the low of the 2. This is the 2 right here. So where's that mouse at? There we are. That's the 2, and that's usually where it goes. Now, what could happen with with the W.D. Gann is this could become a 7 triangle, and it possibly finds a way to start carrying, bottoming, and then bouncing, hitting that, and then it'll come back and meet this again. So this could be the 5 right here. That's what it looks like to me. That's the 5, and this is the 4 right there. And it's breaking the 4 and going after the 2. Let's just put the 4 in there. There we are. And that is the there we are. Okay, there we are. I think that's good that we keep that for a while just to look at it. always makes me think of Jones and R.N. Elliott and W.D. Gann. These are great names in the financial world, technical analysis world. So, all right. From there, dink, 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 dink. From there, what can we say? I guess from there we go to. That's a good question. Where do we go from there? We go back to the dollar index. That's what we do. We're going back to the dollar index. And I just want to hit a save one more time. Make sure we have that. Okey-doke. So let's go back to the dollar index. There we are. There's the dollar index. Yep, there it is right there. Okay, activate. And so it's just cruising, made a little higher high. It doesn't really know where to go. You can see our algorithm is basically saying, doesn't want to let go. They tried to push this thing into the sell. Everybody believed that we were going to see these interest rates. At one point, it was 7 cuts. By now, we'd be on number 4, I guess. And obviously, we've not had any yet. And they're all got their fingers crossed, hoping that we, basically open, they start cutting, open that pocketbook, take that cash out, get that money, Yeah, that's exactly it. That's what they're looking for. All right, Fed, open that pocketbook. From there, we're going to go over to the euro. Let's see what the euro is up to this morning. There's the euro. The euro is finding ways to slide back down again. That was one of the Fibonacci's, that has become like that's the extreme. That's a Jones thing, really. That 23, he always called that the extreme, 77 point something. And you can see here, it has found itself to bounce, then it broke, fell down to the 1/3 right there, made it a base in that area there, then lifted back up to the extreme right there and bounced around it for a while. Actually made it high. That's when they were probably all excited. Oh my God, they're going to cut the interest rates. That's back in December when Fed chair says, yeah, we're going to cut them 7 times. Sure. Like to know where his trading account is so I could follow it. That'd be fun. I'm sure he'll tell us he doesn't have one. Yeah, sure. And at the same time, you can see here, it does the extreme again. That's what that blue line is. It's the one W.D. Gann talked about, the extreme. And that 0.23 or 0.77 he used to talk about. And you can see here it's bouncing around it again. And now it looks like we're starting to... It's hard to believe we're going to take out that low. I don't expect a lot of damage because markets like to look down the road. They like to look down and say what could be and what might be, and they invest in that way. That's their whole idea, is to, invest like what's down the road. So, that's where we stand at this point. Is that it's hard to want to sell this market, because money knows that when Mr. Trump gets back into office and gets his second term, the economy is going to go like the first term. It's going to go through the roof. It's going to run hot and happy and strong, and it's going to be very positive, and people will again be able to afford gas and food, be able to afford electricity, so forth and so on. And so, it's a whole different situation. Now, this is going to be the most dynamic election since about 1880. It's going to be very fascinating. That's where it all went wrong, And maybe this one's the one that's going to where it goes all right. Finally going in the right direction again. So that's where we stand there. From there, we're going to go over, cable's looking awful pretty good too, which is, you know, we keep on seeing this cable, the British pound against the dollar, looking very firm. And there it is right there. Oh, you know what we didn't do? Let's take a look at the intraday of that too. That's the intraday of the stock market. Oh, look at that. That thing's getting smackadoodled. I got some bids out there for calls. Let's see what they look like. Ooh, I'm real close. I am real close. How about that? They're doing a little smashiness. Smash, smash. Smash, smash. It's up, lower my bid by a tick. There were just 2 ticks off of my bid. That's pretty cool. All right. It was a dollar away when I bid on it. All right. Now let's go over to, let's take a look at that euro on an intraday basis. Right there. Now, this has been nice. It's been trying to lift up, from the European Open, really. Went down, challenged it, made a higher low. It's gone up. It's been very strong in here. And now they're starting to put pressure on it again. It is down for the day, but this is just the intraday look to it. And we'll just go back to it real quick. Not there, right there. Go right there real quick, and there it is again. As you can see, oh, actually it is up now. They were pushing down. You see it right there. It's just up a tick or two. So they're trying to get this thing from being down today to up. Not into a buy or anything. You can see it's still minus, and it went into the weekly sell last week. All right, now cable. There's cable. Cable, just as strong, maybe even stronger. You can see it's pushed into a sell for a bunch of days. You can see it's went into the weekly sell last week. Oop, nope, cancel. Let's get rid of that little circly thing. So it went into the sell last week, and and I think these are all transitory. Yep, transitory. That's the way I look at it. I don't see the dollar. Matter of fact, that should be the title today. And that is the dollar is, let's see, dollar strong is transitory. How about that? I like that. That sounds, I like to play on Mr. Powell. If I'm not beating up on Mr. Powell and I'm not challenging his insanity of vocabulary at times, I think I have to put that in there. So I'd say the dollar is transitory. Yeah, transitory. I'm gonna put that in there right now because that's the way I feel. Today's title will be Dollar is transitory. Transitory. I have to figure out how to spell that. That's what we need to do. So yes, there is the cable. Cable's just cruising along, but it's transitory as far as I'm concerned. It's definitely transitory. All right, from there, let's go over and take a look at the Swiss. They were smart. They're not transitory. The Swiss knew what to do when they saw inflation. They quickly adjusted it. Didn't take a year and a half for them to do anything about it. They jumped in it like within a few months, and here they are fighting the inflation. Let's see, transitory. Let's see if that does it. All right, there it is. SIT. Let's see. ORY. OR. There it is. Transitory. There we go. Because that's the way we feel about it. There it is. Yep, indeed. Title. There we go. And I do feel that way. I feel the same way Mr. Mr. Powell talked, and Mrs. Yellen talked, and Mr. Biden talked when we saw inflation go from 1.41 to 6. And all they kept on telling us, it's transitory. For a year and a half almost. Transitory. And then they realized, oh, wait a second, we got problems. And then we saw interest rates rise the fastest that they've ever raised in American history, they claim. So it might be close or right, but no doubt it was fast, that's for sure. All right, from there we'll jump over to 2222. Let's jump over to that's the Swiss, and Swiss has been in that weekly buy since the good government of Switzerland realized. Matter of fact, you can see back in here they declared right in here that they were going to start. And this was in the month of January. They said, "Hey, guess what? We got inflation problems. We're going to deal with it," and they did. They jumped right in, and they didn't have to wait a year and a half. And you can see for that reason alone, we're not looking at a 101 Swiss franc at this point. We're seeing a 90.90, that type of thing. So that is, that's the best thing of all, is that they knew when to do it, and obviously our side here in the States had no idea when to do it. From there, we'll go over to the yen. I heard a really strange story about the yen this morning. They're concerned about the volatility, and they're concerned about the, I think they said the inflation of it. And so I think they're going to try to slow the traders down from trading it. In other words, they want Bank of Japan to be in full control, not the market, but the Bank of Japan. So you can see it's kind of flatlined. Let's see, where's that mouse at? Right here. You can see that it is flatlined. You can see this whole move in here. And usually what happens is that, we've talked about this. They make an announcement. Usually you can go back, 30 days, because when you're on a committee, see, they're so organized, Japan, that when you're on a committee, you get next month's agenda. And so they obviously made the statement, this is what the agenda is going to be. And so now we're hearing that this is the agenda of this month's meeting. And so they knew it, so they're not fighting with it too much. And you can see they got flat until they could figure out what to do with it. Yep. And so that's the whole gig right there. That is the whole gig. And there's no other way of describing it more than anything else, is that we're looking at Japan trying to get used to this stuff. I mean, we saw the stock market. Let's see where the stock market went. We're going to go jump over to the beta platform, and we're just going to take a quick look and see where I thought I saw it was down. Let's see if I can find it. There it is. Yeah, down a little bit. I mean, Monday they put the pressure on it. Let's do it this way. There we are. They put the pressure on it on Monday because they were closed too for Friday, and you can see the pressure on it, and you can see the weekly even making some moves towards trying to press itself underneath the zero line. So it's telling us that there's something going on there. In other words, that means that this is the stock market. Stock market is at all-time highs. Right here, this is all-time highs right there. So this is exciting. We waited 4 decades for it to finally get back to the norm. So right there, that's the all-time highs right there. And believe me, we for years we've been wondering, when are they going to? I mean, they went from 39,000. This is 40,000. The all-time high now is 40,960. That's what it is. And the all-time high was like 39,000, 800 and something or 900 and something, right around there. That happened back in, I want to say 92, 93. So it was the 90s, and then the evens, and then the teens, and now we're in the 20s. It was like over 3 decades, going in 4 decades. We were watching this thing, thinking, when is it going to, get back to all-time highs? We saw it go from 39,000 down to 8,000. Yeah, what a drop that is. They really had, they were punished hard, for all that over exuberant spending, and unfortunately, they punished themselves, and foreign investment stood back, and then before we knew it, we knew that what came out of it in the end was we saw what did we see? We saw the their currency drop. They had spent so much money buying. They had their currency was so strong that they ran around buying all kinds of things, and then losing $1 billion here when $1 billion meant something, and $1 billion there. And I remember they bought Rockefeller Center for $1 billion. People were like, "Are you kidding me?" Now it's probably worth $2 billion. But the thing is that when they bought it at the time, last transaction around that area made it valued at about $400 million. They way overpaid. Whoa, what did we got here? We're getting more slamming going on. Maybe I'm going to get filled. Let's check and see. Let's take a look at the stock market again. It's getting smacked in the head again. Oh yeah, I might be filled. Let me go check. No, I'm just 2 ticks away now. Go, baby, go. Yeah. And they'll probably put even a harder charge into the market. We're about 33 minutes to the opening in New York. So, I mean, this is what you would call, I'm trying to think of the word. This is, what is it? This is, pre-market action. And they're really putting some pressure into the market, that's for sure. So, I kind of thought this thing was going to go find the 40s. Now they just made a low in the S&P 500. Where's that mouse at? Right there. We just made a low of 5,258. I think they're going to go find the 40s, bottom of the 50s, that type of thing. And the reason why I say that is, let me go point it out. Where is it at? Right there. See, it's breaking this, so I'm figuring that it's going to come in here and take out these tops. There's 41. There's 40. There's 57. That's probably what they just did. Now they're playing at 59. So they probably want to hit that and stop somewhere in between 40 and 50. Was that 57? That's what I'm thinking. They want to land somewhere in the middle there, and that's why I'm bidding what I'm bidding. And I can see now they're starting to widen markets. They're getting a little scared, like someone could come in and smash the market. And so that's interesting. I'm seeing, okay, now they've calmed down a little bit. Options are starting to reflect a lot of nervousness. And all I'm trying to do is buy something to lock it in. That's it. All right, let's see who's dinging me too. Some people are dinging me somewhere. I hear it. Cancel. Done. No, I don't see it there. It's not there. Excuse me. Okay, good. There we go. So this is going to be interesting. See how they play with that area there. And there, let's go back to that intraday, because we are seeing some fun action. The Dow Jones Industrial Average is down over 300 points, and there's 59 again. And we're, like I said, we're thinking that it's going to find a way to, let's tighten it up just a little bit. Should we tighten it up just a little bit? Yeah. Let me put a line in there. There's 55. Let's do this. Let's see if we can push this up a little bit. Like that. I think they want to take us down to this area here. Right around in here. Somewhere's in the middle like that. Like that. Right around in there. and they may give us like a smash where they freak out, they slam the heck out of it, and then all of a sudden you're looking at it thinking the world is coming to an end, and then next thing you know is it's not at an end anymore. And that's, oh, they just reflected my bid. Oh yeah, they're getting nervous in the options market. Let's get nervous. Yes, indeed. Let's get a little nervous in there. Exactly. Okay, and we're only a half hour away now for the market to get the New York open, and we're still in a daily sell right there. Whoa, look at that. That was a pop. There's a pop in the wrong way. Okay, so they're trying to, let's see how well they get like I said, I think somewhere between 57 and 41. So that's 18, right? No, it's 16. 16. So 8 from the top would be 49. I'm thinking that it's going to go to that area there. That's what I'm thinking, like around 49. They'll push it into that area. They'll be like, oh, darn. But they just reflected my bid for a few seconds. How about that? How about that? All right. So, yeah, they're getting nervous now. And that's always fun. These are fun days for traders, especially us options traders. We understand the whole world, and when it comes through the eyes of the options. I was telling somebody a couple of days ago, like, you don't drive a car without insurance. You don't own a home without insurance. You don't rent an apartment without insurance. You don't. Well, you might, but you don't. You don't live without health insurance on some level or another. And so, that's exactly, what options are. They're an insurance on equity. You're able to protect things. Now, can you disrupt things? There's the old story of anything can be turned into a weapon and anything can be turned into a gambling tool. But when used right, nope, it's sweet. Sweet, sweet, sweet. Indeed. So, now they just reflected the bid again. How about that? They're reflecting that bid. Now it's gone again, because it's getting panicky. And I've lowered my bid. My original bid is now the bid. There it is. They're worried. They're gonna smack this thing. This is gonna be interesting. It's like a slam-a-roo. Slam-a-roo. There you go. There is a strange drop in stocks today. Yes, not strange. They just they're basically interest rates are rising, and they've been betting for so long that interest rates won't rise. That's the problem. And we have the Fed chair doing that insider trading thing, and then we have we have Fed governors and some presidents of banks, the Fed bank, basically saying, I think there's like 8 or 9 Fed banks. And so they're saying stuff like one cut this year, late in the year. The futures contract in Chicago is predicting 3 cuts. And the Fed chairman comes out, was it 2 weeks ago, and said, hey, we're going to cut 3 times this year. Now I wanted him to clarify, is that like a calendar year? Remember that day I said, is it a calendar year or is it like the Fed's year? What is the Fed year? We don't know what a Fed year is. I think the Fed year, don't they go on vacation or do something, and then like the way the Supreme Court goes, it goes one moment you're a nickel over. Oh, I got to bid 55 just for the sake of doing it. Yeah, I got to bid 55. Why not? Update. And so that's the bigger question. Is it a Fed year? Is it a calendar year? What is it? It's, something like that, right? That's kind of where we're at this point. We're not sure what the Fed is thinking because, unfortunately, Mr. Powell is acting like Alexander Hamilton. He's saying things, and then the Fed itself is saying other things. And it's like the old days with the specialists on the New York Stock Exchange. They got them going one way. They used to say, you got to take them down to take them up. Maybe Mr. Powell is so bullish because he knows that they are going to lower rates. And so he's got to take them down so he can buy them. Remember the old concept, buy low, sell high. Remember, since quantitative easing, we've been in the reverse of that. We've been, some people buy high and sell low. and they're happy about it because all they want is their money back. That's what minus interest rates are. So that is we are in a very strange era with quantitative easing. It made sense at the time, but it was only supposed to go on for 2 years, and now we've been ongoing since almost the election of Mr. Obama that month or week that we go into quantitative easing, and here we are in 2000. That's 2008 in October, November, and now you're looking at 2024 April, and we're still in quantitative easing. And it's like, wait a second here. What's why are the central banks the buyer of last resort? You're giving politicians the power to buy and force people to pay interest at the same time. Can you imagine that? They're forcing them to pay interest just so that they can hold those deposits in their central bank for them, guaranteeing them that they're going to get it back, but they're going to have to pay interest. So instead of the government paying interest or the bank paying interest, the people who put their money in there pay interest. Woo! Talk about, some people could say, geez, Doc, you always come up with some crazy stuff. But this is what quantitative easing is, and that's what it's been doing. Yes, indeed. And so we're right on the edge. You can see it. We got the stock market now. It's at 55. I think it wants to go visit that little white line. It's going to be a bumpy ride, as they would say in Harry Potter. It's going to be a bumpy ride. I think I'm going to bid 45 and not the 55. Let them hand me that. There we are. So let's see. They get down about 5 more handles, and it'll be very interesting. What else? Now, where were we in the currencies? We were just talking about the yen, and the yen was feeling that pressure because they're now a bit concerned about the volatility. They're not really comfortable with volatility in Japan. They control the Bank of Japan owns something like over 60% of the top tiered stocks in the stock market. So they're used to the idea of knowing where it's going to be, when it's going to be. That's probably why the LDP is having all those problems. The leading Liberal Democrat Party has had a bunch of people have to resign. They've had a change of the head of the Bank of Japan over the last year from it, and ministers are resigning. Oh, there we go. We're going again. Whoop, there it goes again. Big strong bid in the calls. I'm trying to get some cheap calls, and so that is what's going on there.
Order cancelled.
There we go. And so at this point, I guess the next one would be let's go take a look at the Turkish lira. Let's see what the Turkish lira is up to. Let's see. Oh, I should have a bid out there. That's right. I'm going to do that. Let me just fix this for a second. There we are. All right, now let's go take a look at the great experiment, as we like to call it. Right there. You see it went into that sell from that wild move yesterday. Let's steal that red line right there. Still in a weekly buy. It's a little underneath the manifold. Not bad, but the green line hasn't gotten there. So that's kind of curious. We're watching that type of situation at this point. And what else can we say about any of that? Basically, I would think that it'll stay in this range. It's at the extreme. You can see it 161 on a Fibonacci. 161. Talk about, we looked for the 37 That's how we came up with the 137, looking at the Fibonacci sequence and just throwing it, just throwing a speculative move there. And then from there, we go over to the South African Rand, which will be a representation to the metals market. You can see sideways more than down. It is making lows. Not today, though. It didn't take out yesterday's low. But you can see this action we're seeing. It's trying to head down. It's going into a sell, which is usually bullish. So in other words, that means that gold should be going up. And it's in a weekly sell, which means gold should be going up. So let's see. Is gold going up? Where is it at? Gold, 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 gold. Right there. And there is gold right there. And gold is going up, and it's been going up. It's doing exactly the opposite of the rand. Or let's say the dollar against the rand. And so, let's see. They're putting pressure on the market again. My bid is the bid. Let's see what it looks like. Oh, there's that line. There's that line. There's that line. There's that line. Oh, yeah. That's what I'm talking about. Look at that. Oh, hit that line. Kick that pig. Wonder if it'll just fall through it. Let's see. That line is, I guess it should be a little bit lower. It should go to 49. That's what I'm thinking. It should go to 49, but obviously Doc puts it up on a screen. People will bounce off of it. The power of the math. It's the power of the math. That's exactly it. It's the power of the math. So, what else can we say about any of this? I would really say we should go like this. We should move it up one more time, and the next one should be 49. So we should have two lines, one there and one there, because that's the zone right there. So it's hit the top of the zone, and you can see it's bouncing a little bit there, and that is that. But I think it wants to bounce in between those two, and that's where I'm really bidding, right there in the center of it, and we'll see how they go. But anyway, let's go back to the metals complex. And then silver. Silver's showing some good life. You can see that right there. No, that's silver intraday. It's coming down off its highs. Let's take a look at the daily. Let's take a look at the daily. And right there, there's the silver. And silver's at its highs of the day. It's not at the peak, but it's up. You can see the intraday, they took it down a little bit, but nothing major. And so. What else we got brewing here? Let's take a look at the copper. There's copper. And that is also looking pretty interesting. I'm going to cancel that. You know what I want to save? I want to save gold. That's what I'm going to save. Give a nice fresh one for everybody. Gold, yeah, gold. Right there, gold. Yes. Well, they're going to leak their way through, as they would say in the hedge fund industry. It's looking leaky. Yes. All right. It's banging against. Let's see if it can come right down in here to that 49. Come on, guys. You can do this. And who knows? Maybe this will be a big day and they'll really slam it. Because, there's a lot of disappointment. Oh, let's see. Chatline says, so it was Dukascopy Academy. That's why you're seeing this pressure. There's a reality. The reality is our inflation is increasing, not decreasing. Our political leadership in the Senate and in the White House is telling you that your eyes are not seeing the truth, and it's not increasing. Things are getting better, and so that's what the problem is that reality is really hard to comprehend. Now, if we go over and take a look at the bond, let's see if the bond is doing anything at the moment. I'll see there, and we go to there, and we go to right there. Look at that. See, it's pushing and pushing and pushing and breaking down below that low now. We're getting past the 2, and it's feeling that pressure, and that's interest rates. As that thing goes down, that's the price of the bond. Interest rates are going up. And that's not what the market and our president and our secretary of treasurer and our Fed chairman, they're all saying the opposite of that. That it's ready to cut. We need to cut. We got to cut. It has to cut. We must be cut. Cut, 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 cut. That's what they keep on telling us. Cut, 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 cut. And so that's the problem, is that the markets are thinking, am I reading this right? Am I seeing this right? And that's what the crazy is all about, is that they don't understand, is that why are we seeing this? In other words, why are we hearing these things that we know? You go out to get food, it's more expensive. You try to put fuel in your machine, it's more expensive. Your electric bill is more costly. You go to buy clothes or medicine or anything, it's all more expensive. But we have our economic people telling us, no, you're misinterpreting it. You're wrong. It's not doing that, and stop saying that. That's pretty much what they're trying to tell you. No, it's okay. And we're getting real close. Matter of fact, at the same time, they keep on saying, we need to raise our normal inflation range from 2 to 3. That's what we need. We need to just get used to the idea. That's like Mr. Obama when he said that Mr. Trump got elected, and he said, you can't get more than 2% growth out of an economy anymore. Times have changed. This is the new. Remember that? The new, the new era. And he kept on saying, you'd have to have a magic wand to, get that drop, that increase in what did Mr. Trump do? He adjusted a few things, twisted a little this and that. Next thing you know, the economy said, no problem at all, and it took off. That's what it did. It took off. And so that is the problem. That is the problem there. That is exactly the problem.
Order filled.
That is the problem. So that's where we stand. That's exactly where we stand. And that's why it looks kind of weird. There we are. All right, now let's see what we got going on here. Let's go over to, did we look at platinum? Let's see what the platinum's doing. We got what we wanted out of this, and if it does it, that's great. And we can always go back to it. Let's take a look at platinum now. Did we see copper? Yeah, there's copper right there. Copper's still very firm. It's following along with the South African rand. And then there's the platinum. Woo, doggy. I keep on saying, I don't know how anybody can short that thing. I don't understand it myself. How can you short that thing? That's what I'm saying. But that's what a market's all about in the end result. That's what a market's all about. So from there, we will take a look at the energy complex, and there is the energy complex. You can see crude oil is over the 85 area. The White House, who sold oil at 60 and 70 and 80. 80? I'm not sure if it sold it at 80, but maybe it did. Is trying to buy it back at 72. It's failed at it. It's raising its bid to 79. And I'd imagine that they will start to nibble even more. I could see that. I could definitely see that, where they start to nibble even more. So we'll see how that all moves along. But, unfortunately, there's some brokerage houses. We don't have many big ones left, but they've been saying that they think oil could go to 100. And that would be a real, hindrance for the White House to be able to buy its oil that it wants to buy. So that would be a big hindrance. All right, and then from there, we go over to the natural. Let's do this. Let's go over to ding a ding a ding a dinga, a ding a ding a ding, a ding a ding a ding. Let's go over and look at North Sea oil. There it is, right there. Let's put it up on the screen. Right there. You see North Sea is up. Let's see, where is it at here? North Sea touched 89, fell back down again. It's at, where is it at right now? At 88.26. The high today is 89.09. And we're in daily buys and weekly buys. And, the Brent is looking very firm. Nat gas right there. It's looking very comfortable also. Yeah, that's looking very comfortable. And we're looking at, let's see, where else are we looking at? That's the natural gas. You see it's trying to pop up. Each day they try to, there it is. It went into the buy yesterday. It's probably in a buy. Well, it's probably in a buy today too because we're not seeing the the algorithm there yet. And you can see the weekly is pushing into the sell again. I guess, it's with all that sliding going on here. But the last couple of days, one thing's for sure, the daily is telling you to just stand it aside at the moment. And then we go down to Spain. Espanol. Spain. We look at the energy company in Spain that gives us a general idea of what the cost is like in Europe. There it is right there. Probably trading over $20. We'll see in a second. Yep. There it is. Right there. Trading at a 4 or 5 day high of, went after 20 and a half almost. Let's see, what do we have there? The high now is today of 20.49, 48, something like that. 46. So playing with the 46, holding up. It's been in cells most of the time now for a bunch of months. You can see weekly's been 10 weeks easily in it. So they just keep on pushing and pushing and pushing. All right, traders, we've had enough fun. We've got a title. I'm really happy about that. That's a good thing. And so we'll just keep on. Oh, and we'll give you a quick look of how the bounce has gone. Right there. Back up from the center of those two lines. Right there. And trying to bounce up a little bit. Trying to perk itself up a little bit. You can see our algorithm went into a buy in the middle of that. About 5 bars back. Now it's trying to push into the sell again. And we got the stock market opening up in about 6.5 minutes. So they may reach in, buy, and then sell. That type of thing again. That's the name of the game. All right, traders. We will catch you tomorrow. Tomorrow is Happy Hump Day, Wednesday already. So it's a lot of fun. Every time we turn around, it just keeps on. From the holidays and everything else that works out really fine. So happy trails to you until we meet again. It'll be tomorrow, Happy Hump Day. Look at pushing into the sell. There's a sell. Happy trails to you, to all our trading friends. Later, traders. Catch you on the flip side tomorrow, and we'll know what the story is by then, won't we? All right. Ta-ta for now.